Well, hello again, everybody. This is L.A. Little, and this is the final video in the Neoclassical Technical Analysis Introduction videos. And what we're going to do in this last video is we're going to kind of wrap it all up and actually apply what we've done in the first set of videos, and that is we've studied the model, we've introduced the tools. Now we're going to put those together, and we're going to show you how to use that knowledge, how to use the model, how to use the tools to consistently profit in the market. And we're going to do that by constructing a simple portfolio. We'll just have it consist of two stocks, one long, one short, so we can be beta neutral. And then we'll take that through how do we find those stocks, how do we construct the portfolio, and then at the end we'll wrap it all up with some summary and conclusion. Now, as we all know, when you're putting a fund together as a fund manager, you're under constant pressure to perform. And the performance of the stocks that you pick, they're driven by factors that not just the fundamentals. There's other things, in particular the technical, that can help you determine your timing on a much more granular and efficient and effective manner. If you don't do that, right, you're going to underperform, and that's going to be a drag on your fund sales over time. So the key success here is you got to have good stock selection, and you got to have good risk management in that portfolio that you manage. Now, NeoTA can help you to do that because it's technical analysis of the entire Swiss stock universe, the major indices, the sectors, and I do it and present it to you, as you'll see here, in a systematic, professional way so that you can easily implement your portfolio management system based around what you do now, along with the timing that you can get from the neoclassical model. And you can do it on any time frame that makes sense for you, whether it's short-term, intermediate, or long-term. So let me show you how to apply this process and how to construct a portfolio using the model and using the tools. Now, in the construction and management of the portfolio, before you begin, you actually have to make some decisions, and in some cases you've already made those probably, about what you're going to hold. Is it going to be stocks, ETFs, bonds, precious metals? What kind of volatility, the beta of the instruments you're holding, so forth. And I'm not going to really go into those as much as to say, the model will facilitate the portfolio management of these types of instruments as long as they're in the Swiss universe of stocks and ETFs. And we certainly do it across the various time frames, and we help you time that. And some of the work that I do and actually present to you in the way of weekly videos will help you in that regard. But this is, in any kind of portfolio construction, one has to consider these things. What we're going to really concentrate, though, is how do we create a model portfolio. And we're going to do it as a beta neutral, essentially a one long, one short. And how do we find those stocks? How do we put them in there? How do we manage them after we find them? So let's pop to that next, which is the actual portfolio construction. So I'm going to go through all of these kind of in detail here and show you how to do them all and show how you marry the model along with the tools to actually do these things. So the first thing we have to do is consider where the general markets are and the instruments that you intend to manage. Are they bullish? Are they bearish? Are they range bound? The model will tell you that. It will also tell you if they're congruent across time frames. And so one of the things that we do on a weekly basis is there's a weekly video that I put out, which actually gives you that kind of information for the indexes and for the major sectors in the markets. And so that weekly video will more or less answer these questions about the trends, about the MTTFs, of which we've explained already, which is the mean time to failure, I should say the cumulative mean time to failure of a trend. So the Swiss video, the Swiss signal trend and signal changes are the things you're going to want to turn to see that. Now the video, of course, is a link to videos. They're all stored and they're available to you. You can actually click over here. You can go back to any of them and review. But those weekly videos, short, concise, to the point, very professionally done. I do them myself and produce them for you so that you have a good idea about what this market is doing now and what it looks as if it's going to do in terms of the reads that it's given us. The other thing is very powerful is this weekly trend and signal changes. There's the MTTFs, not so much the MTTFs, but the trends. You can see what kind of trends are going on, whether they're mostly bullish or bearish. We can actually use this information to see where things may be going. We've got the major indexes here and their trends. So the cumulative MTTF, whether it's bullish or bearish, if it's suspect or confirmed, how stretched it is already. So you can see, for example, right now on this short-term time frame, the SPIX, the broad market, is fairly stretched at this point. And so we want to recognize that in that this market could certainly get a setback in the near term, and it really wouldn't change anything because your bullishness on the longer term time frames is fairly young, and that means that it has a ways to go. And so that, and along with the various sectors, anytime there's a change from one week to the next, you'll be alerted to it, and you can see that across all of the major stocks that are in the index. And then finally, at the very end of this report, is any signal changes that took place on the trading signals page and the cumulative total there. And so there's some information here that's quite valuable that would help you to construct your portfolio. And once you have that background, right, you have a general understanding of where the market is. The next thing to do is actually make those picks. And this is where it gets a little bit more difficult. This is where I can help you. I do a weekly pick list that is available or could be available to you if you choose to partake of that. And it's essentially what we're trying to do is identify the best possibilities, pick the strongest of the strong, the weakest of the weak, if we're going to run a long short portfolio. So how do we do that? Well, the main thing to do is to use the tools to help you. So let's start with these and we'll walk through each of them and actually do it and see what we find. So let's pop into the tools, go to the trading signals and see what we have there. And now the trading signals, what, as we described before, are going to tell you anything that's on a bearish breakout, a bullish breakout, or a potential bearish or bullish breakout, and the same thing on retraces, potential and actual. In this case, we have a very bullish market, so most everything is bullish, not bearish. And in this particular case, we don't even have any retraces because the market has just been going up, up, up. And so we're not actually coming back to some sort of a swing point high that we've already broken. If we look at it on the bearish side, gold, and we were just talking about, being able to look at these things. Gold is giving you a signal that it's bearish. On the bullish side, we can see a number of bullish stocks that are either breaking out or in this case potentially breaking out. Now, since we're already extended, we're not going to want to try to buy breakouts. We're going to want to probably buy retraces or potential breakouts. And so like here's one that is a very big stock. It's in the, looks like it's in the financial sector. 8 of the 9 criterion were met. And so we can pull that over, we can click on it. And by clicking on that, it's going to pop up the charts. And it will pop up all 3 time frames so that we can take a look at them and see what they look like. And so if I pull those over into the screen here so that we can see them, we can see the daily, the weekly, and the monthly charts and what they appear to show us. So let's start with the daily. On the daily, here's that swing point high, and here's another one here. And what it's telling us is that price is close enough, it's within the ATR of breaking that swing point high. That's what this signal back here was telling us. And it's doing it on this time frame, and it looks like it's doing it on the monthly as well as the weekly. And so we're very close to breakouts on multiple time frames. And one of the things you'll learn in Neoclassical TA is that there are some high probability events that you do want to partake of. And one of them is a breakout on multiple time frames, and this one is getting ready to do that. And so for a purposes of a long-short portfolio, this meets the criteria of a pretty good stock that we could put into that portfolio. So we'll click it, and what we're going to do is we're going to tag it and put it into a watch list that we want to purchase or not purchase. And if we keep going down, we could actually flip through these. Here's the healthcare sector, potential bullish breakout. We could see what that one looks like. There's the swing point high, and we can see what time frame was that. Short-term time frame it's alerting us to. Yes, short-term time frame. So if we go back to it, let me click it again. And this might be an ETF that we might want to purchase. And so what we do is we evaluate this, and we evaluate the potential of this along with everything else that we find. And when I say that, for example, I would look at the ABCD structure and say, okay, where does it project to? Well, in this particular case, it projects to about where it already is. So the timing is not that great on the weekly. If we look at it on the daily, the timing looks like it could push a little bit more, but again, we're becoming probably a little bit extended. And what you want to do in each of these cases is do your projections, and then you want to take a look at your MTTFs. This one's not too extended, just turned here, still bearish on the long term, not a bad place to look. So that's not a bad one either, so we would click that one. And we would keep walking through all of our trading signals trying to determine, and I clicked the wrong one, trying to determine those things that look good. Now the next thing we'd want to do is put those into a list. We'd want to add them to our watch list. So we'd want to pick our watch list, which one we want to place them into. And for lack of a better name, what we would do is we would create one, and then we would insert them into that watch list so that we could watch them and review them in order to enter them. So once we've picked the watch list, we click on the add to watch list. It adds those two symbols. Now we have them and we can easily watch them. And in fact, we can monitor them. Stock Monitor will, as you already saw in the previous video, will alert us to anything that's either breaking out or about to, or retracing or about to. And so that gives us the ability to quickly and easily take something from one area of the charts and stick it into a watch list so that we can monitor it through any of our tools. What about bearishness? Well, we could look at the gold, and we could potentially do something with the gold. We see it breaking down here on the daily, on the weekly, volume picking up as it pulls back. I don't know if that's a great looking chart. I mean, the odds don't look that great to me. This could be just a pullback in the context of a larger move up. You know, for example, I could look at this and say, you know, this could just be a retrace that is going to set up another ABCD structure to go higher. So I'm not so sure about this one. And besides, we actually do want to look at some of our other tools like the Trading Cube Scanner and see if we can find something there. So let's pop over and see what that might tell us. So let's go to the scanner. Now what the Trading Cube Scanner does is allows you to look at various configurations of trend along with how old those trends are or how young those trends are. Now I already have some particular configurations that I've saved for myself. We're looking for things to go bearish, so maybe something that's momentary strength. And what that's going to do is it's going to look at short-term bullish and long-term bearish. And you can see it fills that out for us. It goes and does the scan for us across all the stocks, and then we can look down through them. And so what we would do is we would click on each of these to see how they look. You know, how much volume is in them, do they look like they're worth trading or not, and so forth from a bearish perspective, because we want to find something on the other side of one of those two stocks we already found that's going to be bullish. Nestle, let's see what this one looks like. And so it's got a breakout over swing point high, did its retest regen. This one's trying to regenerate higher on the daily. And if we look at it on the weekly, also trying to work higher. Now, actually, there's one thing of real interest here. This is, in other words, we're always looking for high probability events, right? Because when we think about something that we want to do, there's really two things that we're interested in. We want a stock in our portfolio that has a high probability of success, right? So the probability of the trade needs to be high. That's one thing. The other thing, which everybody always talks about, which is your reward to risk. Almost everyone talks about this. A lot of people talk about, two units of reward to every one risk, or 3 units of reward to every one risk. That's what everybody talks about. Almost nobody talks about probability of success because most people can't measure that. They don't know how to do it. But you can do that with the knowledge that we have in the neoclassical model. And what I was about to point out here, and I'll do it again, is that this swing point low, when it was broken, and it was broken on this particular bar, when it was broken, it never got retested. And when something doesn't get retested, the odds that it's going to fail when it comes up here, it's going to fail to get higher and probably try to regenerate lower, is pretty high. And it's usually, in this case, it's usually the bottom third of that bar where it's going to happen. So this area right here wouldn't be a bad area to think about trying to short this stock. Of course, we'd have to let it develop, see if we get some sort of an indication of a failure on our shorter term time frame. But this might be a good one if we're doing an intermediate term time frame portfolio. This might be a good one to think about such a trade. And so you potentially go short here and go long one of those other 2 stocks, either the healthcare sector itself or CSGN, I believe it was, that we looked at, the financial stock. And that way we could construct one of these 2. Now the other thing that we could do is we could just look to see what our weakest sectors are, and if we just glance back up here, almost none of them are weak. Everything's strong. The only thing that seems to be weak here is telecommunications. And so if we pop into the telecommunications and look at that actual chart, we can see that, yeah, it's pretty weak. I mean, it's not horrible, but it's compared to everything else that's so strong, this is pretty weak. So we could take that knowledge and go look for a short in the telecommunications sector. And by that, we would go to our sector trends. So let's do that and see if we can find something in the telecommunications trend sector that would look like a good short. So if we go to sector trends and we go in and put the telecommunications sector, that is, click on the telecommunications sector so we can drill down to what's in it. And there's 2 stocks. So we could look at each of these. And the first one here is Sunrise. This one actually is just broken out on 2 time frames, matter of fact. And that doesn't look like one you would want to short. So we could pop back over, look at the other one, and see what that one looks like. And this one has the heaviest weighting. This is Swisscom, and this one definitely looks weaker. This one actually looks like the index because it is most of the index. So Swisscom would probably not be a bad looking short. And so given that knowledge now, we could actually do the same thing that we've done elsewhere. We could click on that box, we could choose our watch list, and we could select, let me go back down here, we actually select that and push that into our watch list. And that's right up here. So we'd add that to our watch list. So if we go over to our watch list now, and we traverse up here and go over to our watch list, and then we choose the temp one, which actually is already highlighted, and then here's our 3 stocks. So again, we could place some notes in here. For example, this would be our long, this also would be a long, and this would be a short. We could put any kind of notes that we want, save those notes, and we have the ability to construct our portfolio now. And let's just pick 2 of them. I think probably the 2 highest probabilities, one of what we've seen. You'd want to do more analysis and combine it with any fundamental analysis you're doing. But these 2 look like things that could be entered into right here, right now. So SCMN and BCVN. So as you can see, it's a systematic technical market navigation, right, for Swiss equity managers. This Neo TA gives you a way to systematically look at things from a technical perspective. With my input in the videos and the pick list, the watch the reports that you get on a weekly basis. And with the use of the tools themselves, you can actually take action when your risk is elevated or when it's low, when you want to enter, when you want to exit. You start with the weekly report. If you go back to here, you start with the weekly report, the signal changes, the Swiss video, you use the tools, and you construct your portfolio. And then it just gets down to management of that portfolio. And essentially, you're doing the same thing. You're looking at what the tools that you have. You're taking the input from what I'm producing and providing for you. And you're potentially, changing up your portfolio, the leverage, potentially your beta, the number of stocks that you're holding long and short, to alter, what kind of returns you do or don't get, depending on what the market is or isn't doing. I'd like to wrap it up with the thought here that this is not something that is new. I've been using the technical analysis that you see here for many, many years, and I've been able to outperform in the U.S. markets for a very long period of time using the neoclassical theory. As a matter of fact, in 2008, we actually made money. Well, we didn't lose it when the market was down huge. Market slowly catches up, but we just grind higher on a continual basis. We've also been doing this in the Swiss equity market itself with a long-short portfolio. And in that portfolio, as you can see, we've had some very nice returns over the past year. And this is an actual portfolio that has been implemented for a large institutional Swiss client. And it shows a steady and somewhat remarkable return over time, 17.2% over the 10 months here that you're viewing. So in summary, Neoclassical TA, it's a systematic, professional, timely, and robust platform, and it delivers outsized returns over time. You can get the Neoclassical TA standard service, or you can get the services on demand like the Neoclassical portfolio analysis, even a pick list of long-short ideas similar to what you saw the returns on that we've implemented for a large Swiss client already. And we can provide that to you so you can implement this in your client portfolios. You can actively manage investment certificates or funds using the neoclassical thought. So don't hesitate to contact us for a negotiable time to get familiar with this service. We can provide you full access to any or all the materials. So don't hesitate to contact us. And again, thank you for your time. I hope this has been informative, and I look forward to working with you. Thank you.